major shift is hitting the global financial markets today as the Federal Reserve has officially issued its April policy statement. In a move that surprised some analysts, the committee has decided to maintain interest rates at their current levels. This decision comes as inflation remains elevated, partially fueled by the recent surge in global energy prices and high uncertainty in the Middle East. The Fed made it clear today that they are prepared to adjust their stance if new risks emerge. Meanwhile, the global financial landscape is feeling the pressure of massive debt, as reports confirm global sovereign debt has officially crossed the $350 trillion mark. In the energy sector, private investment is booming, with record capital flowing into green projects this quarter. As the traditional banking system faces pressure from a changing global economy, the way the world stores wealth is entering a new era. Whether you are focused on traditional stocks or the growing green economy, the rules are being rewritten in real time.
Wall Street is bracing for a massive shift as Jerome Powell hosts his final meeting as chairman of the Federal Reserve. After 8 years of navigating a pandemic and historic inflation, Powell is stepping down, leaving the U.S. economy in a strange, split-screen reality. While the AI sector is absolutely on fire, pushing business investment up by over 10%, middle-income families are feeling a different heat. Gas prices have surged past $4 a gallon due to the ongoing conflict in the Middle East, causing consumer spending to hit a sudden wall. The big question for your wallet? With energy costs rising, any hope for interest rate cuts in 2026 is officially disappearing. As a new leader prepares to take the chair, the battle between tech-driven growth and a cost-of-living crisis is just beginning. Is the market headed for a soft landing or a sharp correction? Stay ahead of the pulse.
The American dream is getting a radical price tag update, and the numbers are staggering. As of this morning, financial analysts are sounding the alarm on a massive wealth gap shift. While the top 1% have seen their net worth surge by over 40% since 2022, the average American family is now facing a record-high survival cost. Between skyrocketing insurance premiums and the hidden shrinkflation in your grocery cart, the middle class is being squeezed out of the very market they built. But there is a silver lining for those watching the charts. While traditional savings accounts are failing to keep up with inflation, the alternative asset market, including fractional real estate and gold-backed digital currencies, is seeing an unprecedented inflow of cash. The question is, are we watching the collapse of the middle class, or the birth of a completely new financial system where the old rules of saving no longer apply? The economy is shifting under your feet. Stay ahead of the pulse. A bold warning about the invisible drain on personal wealth as markets enter a week of significant volatility. The game of wealth just changed, and most investors are still playing by last year's rules. As the markets open this Monday, all eyes are on the Federal Reserve's upcoming survey and a wave of new industrial data. But while the headlines focus on the numbers, the real story is the invisible drain, the silent erosion of purchasing power caused by the return of high-cost capital and surging energy markets. The elite aren't just saving anymore, they are cognitive investing. They are shifting from passive tracking to high-conviction, AI-driven asset management, and private market access that was once locked behind closed doors. The goal isn't just growth, it's resilience against the volatility we expect throughout this week. If you're still waiting for a return to normal, you've already lost. In 2026, the only way to protect your future is to outpace the machine. The era of the retail gambler is over. The era of the strategic architect has begun. Stay ahead of the pulse. Like and follow to build your wealth with intention.